Welcome to another Rooster Talk, where we get an update from ASX companies and the guys who run these companies. We're here back at the University Club in UWA in Crawley, and I've got Andrew Paterson back here from Great Boulder Resources Limited. The ASX code is GBR. I think the current market cap is 29.8 million. So, Andrew, from your last coffee with Samso, was a couple of months ago, I think, 3 months ago.
Yep.
What's been happening?
Quite a bit more drilling. So we've been doing a lot of definition on the kind of central core of Mulga Bill, and more recently we've confirmed the discovery of a new prospect at Ironbark, which is about 1.4 kilometres east of Mulga Bill, or due east of Loaded Dog, in fact. And that's looking really nice. We've only got 7 holes in that so far, but we'll be back there probably in the next 2 weeks.
The results that you're getting are not too dissimilar to Mulga Bill in the sense of a decent sized intercept, not 20-30 metres obviously, but decent grade. I mean, are you able to conclude anything? Are you seeing any similarities between the two?
Well, importantly, we're seeing some key differences there. So one is that there's really no alluvial cover, or very superficial alluvial cover at Ironbark. The weathering there is a little bit shallower, and it's basically a gold only deposit from what we're seeing. So we're not seeing copper, bismuth. So it's a different style of mineralisation. It appears to be simpler structurally and in terms of the mineralogy. And so we'll be doing some met testing on that in the next couple of months as well, just to confirm those initial impressions. But the other thing is that because of its location and being, or not so much the location, but where the gold is in relation to surface and reasonable thicknesses there, it looks more like an open pit prospect. Whereas Mulga Bill, given the depth and the weathering profile there, is probably more of an underground target. So it's really nice to have that balance between the two, I think.
Do you think it's from the same system, or we're talking about two separate systems here?
Yeah, it looks like something different. So more like a kind of a standard Archean orogenic gold system. Whereas at Mulga Bill, we're kind of still grappling with what it actually is. But something intrusive related or magmatic related, possibly epithermal. We're still kind of figuring that out based on the indications from the geochemistry so far, and working with Scott Halley on that.
For a lot of guys out there who sort of not familiar with geology and different systems and things like that, I mean, 1.4 kilometres you mentioned, right? Sort of to the east.
Yeah.
It's a long way in terms of when you stand on the ground. Is it common for this that area there, or in your experience, is it common to see different systems so close together?
Yeah, I think it's fair to say at Paddy's Flat, where Westgold are mining underground, they're mining a number of different styles of mineralisation within the same mine. So and different orientations, different host rocks. So seeing that the amount of complexity they've got there within 1 or 2 kilometre distance of strike, that kind of explains why we're seeing so much complexity at Mulga Bill. And so these deposits, we just don't know, for example, how old they are. That's one thing that we hope to be looking at in the next year or so, is to do some age dating. It's kind of academic and really of geological interest, but it would be nice to know if one's earlier than the other and how they fit together. It's not that unusual to have different styles within the same field, and Meekatharra is a fairly diverse area, so it's really interesting actually. So we hope to find more of those. The other thing with the Ironbark discovery is that it demonstrates, we found that from conventional auger sampling actually, and it was quite a low level gold anomaly, just 2 points, 2 samples. So that throws up a lot of other areas of interest that we would look to test, where we've got other low level gold anomalies in the same data set that we just haven't looked at yet. So there may be potential for more of those. It is smaller. It looks to be somewhere around, maybe 500 metres long, and probably made up of lenses of mineralisation within that 500 metres. We're still obviously defining that with more drilling, but by the same token, that's a pretty decent size and would make quite a good size mine, ideally, if everything comes together.
I mean, when we sort of talk geology and we're postulating, a potential provenance in exploration, right? So is the fact that you're getting different system a good thing in the sense that there's a lot of activity happening, what we may call like a big cooking system. Is that something that is surprising you, or you guys were already targeting that when you came in?
I guess it was a nice surprise. We were hoping to find other things other than Mulga Bill. So the first surprise, in the first 12 to 18 months was that we extended Mulga Bill a long way beyond where there was initial drill hits there by Dore. So that was great. We quickly realised that it was a really big system at Mulga Bill specifically, and that's going right down the whole 6 kilometre trend through Loaded Dog to this new southern area that we haven't tested yet. But we're also hoping to find other things outside of that, and Ironbark is the first one, so that's a really good surprise to have, a tick in the box in terms of our exploration.
I was, and part of that announcement, the recent one, you talked about the significant copper discovery in your drilling at Mulga Bill.
Yeah.
Can you run that through and narrate to us when you say, again, I mean, I'm keen to understand whether you guys were targeting that, or is this something that you're going, hey, we may have something different?
Yeah, that's really interesting. That the copper zone spatially looks pretty simple. It's fairly tabular, approximately vertical, 20, 30, sometimes 40 metres thick, and it just runs straight down from the north to the south, basically parallel to the big shear zone that runs through the area. If you imagine, say this was the west side, you get all our high-grade gold off to the side in different orientations. So they're spatially separate to the copper, which is good from a mining perspective, because if you end up with two different product streams, you can mine them separately. In terms of mineralogy, metallurgy, recovery, we're still working on that, so we'll do some more work on that later in the year when we take some core samples through the copper zone. And again, in terms of where it came from, the genesis of the copper versus the gold, obviously we think they're related because they're getting the same multi-element signature, but we don't know quite what that all means, so we're still putting that together.
You talk about you guys are looking at mineralogy, recovery rates and things like that. A lot of people out there see this as a bit still early stage, but obviously sometimes you sort of have a feel for the potential size. Are you seeing that consistency? Do you think it's going to drop off the drill intercepts, the mineralisation? Do you think it's going to drop off, or are you seeing consistency?
We're seeing
potential to drop off, I should say.
Yeah. We're seeing consistent patterns in the multi-element data, which is really important because that was our initial targeting technique. What we expect to happen as we get more and more data of different sorts, from geophysics to geochemistry to actual drilling, we're pretty sure there are cross-cutting structures going through the whole area, and that will affect the continuity. There'll be gaps within that 6 kilometres where there's probably no gold, and that's normal. Obviously, you wouldn't expect something to be 6 kilometres long and continuous. So there'll be gaps in there. The key is now, with our ongoing drilling programs, find out where those gaps are and concentrate on the good bits, basically. So, if we find within that 6 kilometre zone there might be, for example, 4 good bits. They might be like the one we've got at the moment, it's about 1 kilometre long. If we find another 2 or 3 of those, then we're off to the races. And That's where we get the best bang for our buck, is obviously concentrating drill meters on the best areas, and not wasting drill meters on the gaps, basically. So that's what we're working on now.
With Mulga Bill, obviously, a lot of focus has been there, and you're obviously generating a lot of interest from there. Are we going to see sort of the typical, satellite pits, 2-3s pits running along strike? Would that potentially be the picture that people could see when you're at that stage? Is that something that you're seeing? You're thinking you're seeing now, I should say.
Yeah, I think that would be realistic, just because of the distance. So, for example, from underground mining, you're not going to go in at one end and then develop the whole way along, because that's just too expensive. It would be cheaper to develop a number of operations, and the same for open pits. So it just depends, how big it is, and obviously the metal distribution. So the more ounces you've got, the more tons you can move to get it. So that's the key.
Just going back to the copper, obviously, is something that it's interesting in the sense of where you guys started with and where you're at now. And we sort of touched on whether, is that going to encourage you? But is it a encouraging thing, or is it a potential technical problem, a good technical problem? Like, what else is here, or what are we dealing with? Those kind of postulating that drives a lot of people like yourself.
Yeah, well, I think it's both. It's a good technical problem, because with a gold mine, gold mines are fairly simple. You produce a bullion bar at the end of the day. A lot of those guys
up there is not going to be happy with that statement, mate.
But it's more simple than, for example, an iron ore mine, when you basically need a railway and a port and all sorts of other logistic solutions. For gold, once you produce a bullion bar, you can put it in the car and take it to the mint. So copper adds some complexity there, because you're dealing with a different product. There's potential for it to complicate the metallurgy if it consumes more cyanide. So that's the next thing that we need to understand. So that's why having spatial separation between the high-grade copper and the high-grade gold is useful. But it's also potentially an economic bonus. You might have kind of a credit metal there when you're mining, that you'll end up with a copper credit, or conversely a gold credit during processing. So that's a positive. So in our announcements, we've emphasised that gold is the key kind of focus. But while we're drilling all those holes, we're picking up this sulphide zone anyway. So we're going to get that data whether we like it or not. So we'll be putting all that together in a kind of overall picture.
When I look at your results, just sort of scanning through and looking at numbers, this at that, and I'm seeing similar depth where you're seeing this. Is that something you've noted as well?
Yeah, definitely. So part of the reason is that we've got about 100 vertical metres of weathering, from surface alluvium about 10 metres, then you might have 50 or 60 metres of completely weathered clays, and in that zone it's pretty much depleted. So there are some gold grades up there, but they're the exception. And then once you get down into the near fresh and the fresh rock, that's where these high grade hits are. So that's why we're kind of seeing a lot of results from about 90 metres down hole to the end of hole, which tends to be, with our RC drilling, about 250 metres. So it's in that interval.
Again, you talked about your 3D IP and what is generating. My understanding, and correct the narration here, is that you're basically looking for sulfides or sulfide mineralisation.
Yeah.
Where you have, is there a system where that's lacking, where you can't do IP, or it's become the sort of holy grail of trying to find mineralogy, or mineralisation, I should say?
No, it's not the holy grail. So it wasn't kind of the knockout blow for targeting. And the reason I say that is because in the main the sort of central 3 kilometre zone where we've done most of our work to date, that's where the gravity and the IP and the EM are all coincident. But we recently announced a hole that went right through the middle of those anomalies, and it had a lot of pyrite in it, but it didn't have any gold. So we think the IP is a kind of spatially a guide to where the mineralisation is, but it's not the bullseye. So we're probably dealing with targets just slightly to the east of that IP, which is kind of like a big sausage in effect running down through the project. But the other thing we found was that the very southern end, where we've got our air core hit at 24 grams a tonne, which we'll be drilling hopefully next week, there's no sulphide signature down there, so we didn't get any IP signature off of that. So that's an example of high grade gold with no IP target. So it might be something different again. We've just got the one intersection there, so we really don't have much data. But yeah, really interesting. So it's kind of blue sky potential there.
I mean, we talk about geophysics a lot. Everybody seems to be talking about geophysics. In your opinion, in your experience, are we using it more today? Obviously, technology and everything else better, but are we using it more today than say maybe 20 years ago? Are we relying it more today than before, or is it relatively the same?
In my experience, I think we're using it more, and it's probably because geologists are understanding, how you can get a kind of a big picture view with geophysics pretty cheaply. For $100,000 or $200,000, you can do, for example, an electrical survey over several kilometres. Whereas for you to cover that amount of ground with drilling will cost you millions. So I think there was perhaps in the past, maybe people had a narrow-minded view that everything was about mapping and drilling, but geophysics is a great first pass.
News flow for you guys going forward. I mean, what are the guys out there demanding from you or expecting?
High-grade hits.
Sometimes they're the same, right?
Yeah. So in the near term, we've got all the air core holes to come back. I think from memory there was 57 holes all along the Mulga Bill trend, drilled in May to early June. So they shouldn't be far away. Then we did some more air core drilling at Whiteheads, and that'll come back after that. But moving forward, we've got the RC rig coming back at the end of this week, so end of June, and that'll be drilling continuously for the rest of the year. So when we're doing different types of assaying, we either assay for gold only, and they come back at the moment in about 45 days from the lab. If we do multi-elements, that pushes out to about 60 to 65 days. And this is kind of a movable feast. We're keeping an eye on lab turnaround all the time, obviously, just to make sure things don't blow out as far as we can. But that's to give investors an idea of how long it takes from the rig to the assay. And then, to be honest, it often takes another 3 or 4 days to actually write an announcement, get the figures drafted, put everything together. If we get anything massive, we'll go into a trading halt to ensure our continuous disclosure obligations are met. But by and large, we'll put those announcements out as soon as we can. So, sometimes people wonder why it takes so long to get these things together. Have to remember there's only really myself and Dan in the office putting the announcements together. It's actually quite a lot of work. So at the same time we're running drilling programs and doing this and that and logistics and everything. The key is that we have continuous news flow from now to the end of the year and through into the new year, and obviously start drilling again in January, and away we go in 2023.
I guess the big elephant in the room for all the investors out there is that they've had 2-3 weeks of not so good time on the market. A lot of people is already calling that this is the start of the doom, but I think it's not. I think that we're actually dealing with different parameters that is causing this kind of things, because companies like yours, business like yours, hasn't changed over that time. Price has changed, market expectation or market perception of your value has changed. That's granted.
Yeah.
Give us your thoughts on that, because it's one of the things that you guys will have to struggle with, because if the market thinks you're gone, then you're almost gone, right? But the business hasn't.
Yeah.
So what's your thoughts on that?
I think really it comes down to market's appreciation of risk, or I guess definition of risk. So really there's a lot of kind of macroeconomic effects coupled with end of financial year tax loss selling. So any companies that were down a bit are sort of susceptible to tax loss selling, and we've suffered quite a bit from that. And obviously the whole market has been down in the last few weeks. Then you've got global uncertainty around, US recession, Ukraine war, etc., etc. But all of that to me signals that when things settle down in the second half of this year, gold will become more appreciated as a safe haven asset. So initially gold miners, I think, will benefit from that. If you see the gold price in US dollars has been pretty stable by and large, within a kind of $50 range. And the Aussie dollar price is still pretty strong. So I think gold miners will benefit from that moving forward. And then with exploration companies, it comes down to the three key fundamentals, which are how good the project is, how good the management team is, and whether you see value in the company. And I think, I'd certainly argue that on the first two, we've got a really good project and a pretty strong management team, and it's getting better in the sense that we're employing more geologists all the time. So it comes down to value, and I think we're, certainly one of the cheaper quality stocks in the juniors at the moment. So, in my view, I think the gold sector is set for a fairly solid future with all the uncertainty around in the broader market, from the housing market through to interest rates through to broader global concerns. I think gold will be pretty strong in that period.
Yeah, I think my 2 cents worth is that it's times like this highlights the men from the boys, the real stuff with legs, and those that lack, because when the bull's running, it's really hard to pick who's really got the real legs in the projects.
Yeah.
But look, Andrew, thank you for coming up and showing us, telling us what's been happening. And I like this kind of things where you can actually just come and just tell us what it is.
Yeah.
When you look at an intercept, it's very hard to decipher what that actually means.
Yeah.
And what it means for the company, right?
Yeah, absolutely.
Yeah. So till next time, Andrew. Any last words to investors out there?
I guess one thing I didn't mention is cash position. So if companies are short on cash at the moment, it's probably going to be tough in the next few months to raise more. But Great Boulder's well cashed up through the rest of the year. We're obviously keeping an eye on the broader market to make sure that we stay that way. And so yeah, we're in a really good position. So I'm pretty happy.
Okay. What is that figure? I think you guys did a big race not long ago, right?
Yeah, we raised 7 million in March, I think it was.
Okay.
So yeah, we'll report that shortly for the quarterly, but it'll be sitting around 6 mil for the end of quarter.
Yeah, no, that's a very, very good point. Cash is king in times like this. And,
yeah.
And you need that cash to keep the drills turning, I guess.
That's right. Keep the lie detectors out there.
Yeah. Yep. All right, Andrew, thank you, and till next time.
Thanks very much.
All right.